Hey guys, welcome back to AZ Trading. Hope you're all doing well. In this video, I'll be giving you guys some pointers on how to trade during days with very high impact news events, such as non-farm payroll, NFP, and the exact strategy you can use to capture moves just like this bullish trade spanning over 400 points on the Dow Jones. But this strategy will be applicable in all the indices as well as Forex pairs. But first, if you've seen my videos, you know what's coming. Here are my executions and the labels, just to show that this trade was in fact taken live, and this is not just a hindsight backtesting review. So you can see where I placed my entry, where I managed to take off 3 partials along the way, leaving 10% of my position to run, and then eventually getting stopped out at my break-even level. And before we get into the analysis of how we managed to capture this trade, I just want to say a few words on trading during these high impact news events. The first thing I want to mention about these high impact news event days is one of my most important rules, which is prior to the release of that news event, which in this case was at 8:30, if you have any open positions going on before this news event ticks, my number one rule is to have no trades running during the release of news. When it comes to low impact and medium impact news, I'm okay holding my position during the release. However, when it comes to high impact events, this is the one thing that I'll never do, which is hold during the release. Because that stop loss that you set, as soon as news ticks, if you are watching price live during this moment, this huge bearish impulsive move over here, which is over 200 points, this move happened just in a couple of seconds. What that means is if I had a position just before 8:30 and we had our stop loss around 30-40 points, somewhere around there, as soon as news rolls over, your stop loss will not be respected, and whatever you decided to risk on this trade, because price moved so quickly during that release, your trade would have ended up getting stopped out at a much lower price. So you'd end up risking much more than you decided. And if you did short during that release and you got stopped out down here, I would actually consider that very generous of the market, because during these very high impact news events, we have really no idea how far price is going to dump or how impulsive it may be. So price could have just as easily continued dumping to the end of the earth. If something like this happens, which is quite common during these events, it's not unlikely that you'd end up risking around 50% of your account. And imagine if you risk 2% on that trade, you just blow your entire account just like that. So this is my number one rule when it comes to trading high impact news events, which is to always wait after the release to find your own setup instead of trying to capture the impulsive move. Something else I like to say about these days is, I'd say that if you're quite new to trading, these types of days would be very interesting to watch and to study how liquidity is being taken, whether it's being taken immediately or whether it's being taken with multiple entry opportunities. This would be an excellent study day. However, I would not recommend trading these days unless you are slightly more experienced, since the market can move very quickly, and if you're not very nimble at calculating your risk and seeing your setup form, then you can get punished very quickly. However, if you're quite an advanced trader and you know exactly the type of setup you're looking for and you know exactly how to calculate your risk, then of course, if your A+ setup forms, allocate that risk and take that trade. Just make sure that it's not right before that news event. Alright, I'll just move on to the strategy that we use to help us capture this trade. I don't want this video to be too long, otherwise you guys will start to get bored of me. But yep, the strategy we use is the RMR pattern, where first we look for a raid, and if I scroll to the left, we have these relative equal lows. This might be a bit clearer on the 30-minute chart actually. So as price broke through those relative equal lows, we can call this the raid. Next, we look for a market structure shift. So we had a bearish raid. We wait for a swing high to be broken. This swing high was broken straight after. So this would be considered a good market structure shift since it happened right after the raid and it broke the initial swing that created the raid. And finally, we look for a return area. And if we look during that market structure shift, we have this gap that's been presented, a 30-minute gap. And all that means is once price retraces into that gap, that's where we can place our long entry. However, you can see that I did not place my entry right at this price. I placed my entry at a much cheaper price. And so here we have a 30-minute gap, and I've just zoomed into a 1-minute chart and we can see this is where the 30-minute gap was. So if we waited for price to retrace and we bought during that gap with our stop loss either at the bottom of the raid or the bottom of a different swing low, you can see that this trade still would have been a winning trade. However, you'd have to endure a bit of drawdown. So how did I find this entry over here? If we look to the left, we can refine the return area. So underneath this gap, we have another gap over here that's been left unfilled. And if we look underneath again, there's a gap over here which has already been filled. So this one that's been left untouched, if I drag that to the right, as soon as price retraces into that area, you can see it's a very precise and a very sensitive area. And that's exactly where I placed my long entry. And once I've placed my entry, I've put my stop loss at a previous swing low down here, since there would be not much reason for price to go any lower than this swing low, since the gap over here has already been filled. So if price went lower and reached this swing low down here, this would already invalidate my trade idea. So let's just say price went down to this area. What would that make? That would make a relative equal low right there. And we know that under relative equal lows is resting liquidity, so price would more likely continue lower. So depending on how aggressive or conservative your stop loss is, you could have it at the bottom of the raid, or you could have it at a slightly higher swing low. Or if you're very aggressive, you could have it at the bottom of the return gap, which would be right over here, which for me is a little too aggressive, and I'd be afraid that the spread itself would just stop me out. So for this trade, I had it at a swing. So just then we outlined an RMR pattern on the 30-minute time frame. However, now that we're zoomed in on the 1-minute time frame, you can see that we can be even more precise and we can find an even better entry. So once again, we have this raid, and on the 30-minute, the market structure shift was up here. However, on the 1 minute, we can see that a swing high was broken over here. So this could be your 1 minute market structure shift. And during that market structure shift, what do you know? We also have another gap here, which can be your 1 minute return area. So if you're very clever and very nimble, your entry position would have been around here. I didn't manage to get this position. And after this initial first entry, you can see that price pumps up and forms yet another 1 minute gap. This gap over here was in fact the gap that I was looking to participate on. I had my limit orders set. I had my limits at the bottom of the gap over here, and what do you know, price reaches that return area. However, my entry was a little too optimistic, so my position was not triggered. But we all know what happened afterwards now. Price returned into the 30-minute gap as well as that 1 minute gap that was left untouched. So this is actually a very interesting case to study, where if you didn't manage to get your first entry, price had actually given us a few opportunities to get in a second or third time for us to capture a bullish move. However, something that a retail trader would more likely do is follow the sentiment. So I'll quickly talk about sentiment. So I've scrolled out a little bit and we can see that during the Asian to the London open session, price is obviously bullish. So the sentiment is currently bullish. And we know that retail traders love to follow trend lines and they love to use their EMA strategies. So this bearish trend line, as soon as price starts to become bullish, you can see that finally price begins to make a bullish trend line, probably around this area once the sentiment is bullish. So retail traders are very likely to buy and buy and buy, and they'll be placing their stop losses at different swing lows to protect their position and trail their stops. But we know that retail traders and their stop losses are very predictable, and the market will always keep these areas in mind. And we know that as soon as news tick, all those retail traders going long following the sentiment, they were immediately stopped out. So anyone that was placing longs during this bullish move, they would have been stopped at this raid. And this is what we can call a break in sentiment. And once sentiment is broken and most of the traders have been stopped out, that's exactly when price loves to go to where it originally planned. Alright, let's quickly finish off this video. 2 more topics. First one, relative strength, which means why did I decide to long the Dow? And why not the S&P or the Nasdaq? Very simple relative strength analysis. Let's just draw a fib from the bottom of the raid to the top of that market structure shift, that 30-minute shift, just so we can see how deep price retraced. And we can see that the Dow retraced above that 50% level. Here on the S&P, I've drew the same fib, bottom of the raid, top of the shift, and you can see that price has retraced below the 62% level, which means that S&P retraced deeper than the Dow, meaning it is weaker. And finally, here on the Nasdaq, and you can see that price retraced much deeper than the 62% level. What does this mean? This means that the Nasdaq is the weakest, S&P is in the middle, and the Dow is the strongest of the three. So if we have a bullish pattern, a bullish RMR forming, we want to place a long trade on the strongest, which is the Dow. And finally, objectives. We always take objectives at logical areas, so areas of liquidity and areas of gaps. This means we don't take objectives based on what feels right, because our feelings are always out to sabotage us. For example, when I started trading live and I got excited with profits, as soon as I hit a very nice and round whole number, like 100 or 1,000 or 420, I'd really just want to get out of the trade and pay myself straight away. But you can see that doing so is not based on price, and it would be a purely emotional decision. And in trading, our job is to release our inner robot and do our best to not let emotions dictate our actions. So the first partial I took, it's pretty obvious at this equal high, which is an area of liquidity. Second partial, if I scroll out to the left, we've got a 15-minute gap in here. I'll just highlight that and extend it to the right. When price reached that gap, that's where I took off my second partial. And finally, this third partial, which was taken at 10:41, which is literally at the tip top of the swing. How was I able to find this objective? If we look to the left, it's nothing to do with anything over here. However, back on the Nasdaq over here, we can see we have a swing high over here. As soon as that swing high was broken, what time was it? Exactly 10:41, and that was the reasoning for taking off this final partial, which is a timed objective. And afterwards I had 10% to run. I was ready to go to sleep, let my position run and see it run to the moon. However, pretty quickly, like 10 minutes later, I got stopped out. But overall, still a trade I'm very pleased with. Alright guys, that'll be it for this video. I hope you enjoyed it or learned something new. If you did, give this video a like and subscribe. It makes me very happy. And if you haven't joined our community Discord already, I'll leave the link at the top of the description. And in here you can find like-minded traders where we trade with a very similar strategy. You won't find much retail logic in here. So this could be a pretty powerful tool with your learning. Just remember, if you join, head over to the rules section and click on that tick button. That'll unlock the entire server. But yeah, other than that, if you've got any questions, leave them down below. I'll get back to every single one of you. But until next time, have a great weekend everyone, and take care. Peace.